Yo, people, what's good? Welcome back to the channel. Hope you're all doing well. Episode 2 of the accountability series is going well. I've taken a couple positions today, so I thought it would be a great idea for me to come over, talk about it, learn from my mistakes, um, and then yeah, just give myself like some critiques, some takeaways for me to continue to be the best version of myself that I can be in this space. So just to get straight into it, first position that I took today was a GBP USD sell. Um, Let me just use the replay function to kind of give you guys an idea of what it was that I was looking at the time, because clearly it did not go in my favor. Um, so initially what I saw was, this is London session, by the way. Um, what I wanted to see was respect for this 4 hour order block. Now, at the time, the problem with the replay function sometimes is it doesn't show you how price was moving within the 4 hour candlestick at that point in time. It only shows you the end of price action after 4 hours is essentially done. So when I came into the charts, um, we did not have this massive candle above, the 4 hour order block. What we had was price wicking through, but showing initial glimpses of respect for this space as a premium PD array. So I went into the mid time frames. Um, on the 1 hour at the time. Again, let me use the replay function. This is what I'm seeing. I'm seeing respect for this 1 hour fair value gap. Price action has already closed and we've started to form this candle here at 8 a.m. So I'm already seeing, respect for this 1 hour fair value gap. Go down into the 15 and the 5. I'll go down to the 15 because that's where the context for my entry was. So we had this rejection, this initial amount of sell side price action, and we have the first presented fair value gap after price came up into our PD array. So initially, you can see the level of support that it has. Price comes down, fills this fair value gap here, proceeds up ever so slightly, but then it breaks down and disrespects that. Um, I extended out in time this 5 minute fair value gap. Sorry, this 5 minute order block. You can see the blue line. You can see the initial amounts of respect as well that price had for this. Um, and I placed a sell stop order at around 1.35. Trying to figure out where I placed it. It was around 1.35794. It's easier to have a look at it here. So yeah, I placed at the time this is how the candle was printing. I placed a sell stop order below this low here. Um, Stop above this high. And I was targeting the previous session's low, Asian low. So I felt like overall, like it was a good position. Um, was in line with my rules in terms of one, me favoring reversals. We had, the a run on liquidity, so I don't think I mentioned, but on the 1 hour, you can clearly see. Obviously, the charts are divided. We also had, with price also coming into this 4 hour bearish order block, we had this run on last Tuesday's high. Um, So all of those factors kind of prompted me to feel like this was a pretty decent idea. Took the position. We got an initial breakdown in price. I felt comfortable leaving this. I think the only criticism I do have for myself in regards to, well, I have two criticisms. One, um, obviously just being aware of the trend. There's always a conversation about whether counter trading is good, well, trading counter to the overall trend whether it's a good idea or not. I think in this case, with how bullish GBP USD has been, um, and how clear, I guess, with hindsight, buy side liquidity is as a draw on liquidity. I guess it probably was a bad idea to probably look for shorts in this case. Um, but you know what? The signature was there. I really like reversals, and I favor them more so than continuation ideas. Um, and yeah, the opportunity was there. I took it. I took this also at reduced level of risk as well. So I only put 0.75 on this position off the back of obviously yesterday's win. I'm quite close to my profit target of 10%, so I didn't feel like I had to risk, 1% in order for me to kind of get to that goal. But yeah, overall, I didn't feel like it was a bad position. Yeah, just a little note that I wrote for myself here in regards to what I was looking for. So again, wanted to see displacement lower from 4 hour bearish order block. Signature was present on lower time frame. Reversal idea was also framed around idea of DXY. This is supposed to say filling the gap from Tuesday open. I need to correct that, so apologies for my poor English. Um, yeah, just a quick look at DXY. Obviously, we have this gap here that I originally wanted price to fill. You'll see a bit more clearer on the 1 hour. But yeah, we gapped open on uh, Tuesday's open, and yeah, I was looking for a pullback into that area. That's kind of what prompted me to feel comfortable about shorting USD denominated pairs anyway. Um, so yeah, and in terms of how it played out, this is how it played out. The other critique that I had for myself, on top of obviously being aware of the idea about going against the overall trend, was the fact that I wasn't necessarily present after I took this position. So after I took this trade, I literally just went to sleep. Um, Ideally, that's not something that I want to do. I don't really want to be that guy either. I want to be someone that is present when he's taking risk. Um, and this was actually a position that I could have invalidated had I been present, because my invalidation point would have been on the break of the midpoint of the order block that I highlighted. So this is the order block that I kind of, used to justify my trade. And on the break of, this midpoint here, even though this candle here was quite heavy, I could have still had an opportunity to cut my risk down, even if, I fully accepted the risk and I fully accepted the idea that I was going to lose uh zero point 0.5 or 0.75 R on this trade. I could have cut it short. So I guess those are my criticisms for this position here. Just be more present. Um, and obviously be aware of situations when you are going against the trend. Because again, like this situation, a lot of the time, what happens is price wants to continue with its underlying trend. Um, Next position I took was a GBP AUD buy. So I sat out London, the rest of London. This position didn't go in my favor. Allowed price action to play out. Didn't see anything again on like GBP USD or USD gold, that sort of thing. I did see an opportunity on GBP AUD. Um, and just from a high time frame perspective, again, you can clearly see what the trend is in terms of direction, overall direction, clearly bullish. Um, on the daily, again, clearly bullish off, from the back end of last week to the start of this week. We've put in, three consecutive, quite strong bullish candles. Um, and so it's very clear what the drawn liquidity is as well. So even though this isn't what my target is, I'm still in this position. Um, I know what the drawn liquidity is. So yeah, I've just outlined obviously sell side liquidity. I've also highlighted this inversion fair value gap on the daily. Um, and then yeah, this high here as a drawn liquidity on the 4 hour. This is where the framework for my trade idea was built. So it was actually built off of this 4 hour inversion fair value gap. So for me, it ultimately comes down to if this pair is bullish, and prior to today's price action, we've been pulling back, we've been retracing back into Monday's range. For me, if you're going to be bullish, where are you going to be bullish from? Those are the type of questions that I ask myself. So this 4 hour inversion fair value gap, um, obviously being used as a previous area of resistance. um, just seeing this candle here prior to London, it was kind of a no-brainer for me to kind of use this to build a framework going into New York. On the 1 hour, again, you can see the the volume imbalance on the 4 hour. Um, you really see, clear signs of displacement on the 30 minutes. So the actual market structure break, what constitutes a change in the state of delivery for me, it happens within these four candles here. So three candles, one, two, three. The market structure break happens in there. So if you go into the 15-minute, well, you can't see it here just because of the way the candles form, but you'll see it on the 5-minute. The market structure break happens here, and then I built once this displaced, I wanted to continue to see um, ideas, justifying my overall buy picture. So I want to see things that reinforce this image that, GBP AUD is going to continue going up. So we've got this 15-minute inversion fair value gap here, outlined by the two dashed red lines. Again, the previous level of resistance. You can see how price came up into this 15-minute order block. Price rejected down, uh, but then we proceeded to displace back up, displacing this area of resistance. Um, and then yeah, just prior to New York Open, we returned um back into the range, back into this area that was once resistance and now being support. And you can see how price has since been um just going up just off of this area of support here. So I actually placed, sorry, a buy stop above this high here. So this is the dealing range high for me. This was the high that was put in during London, this high here. So buy stop above here, stops below. Originally, my stops were below uh, this 30-minute order block. Um, and yeah, got triggered in as prices continue to move and sorry, as prices continue to move and shown willingness to go higher. Um, I've actually just moved my stop up ever so slightly, so I've moved it closer to this propulsion block. So now my stop is sitting at 209085. Which I feel like is enough flexibility to allow this position to just do its thing. So yeah, again, just a breakdown of the images that I collected. You can see the 4 hour inversion fair value gap, the area of price that I used to frame the idea. And then again, you can see a number of arguments kind of justifying price going up. So you got the 1 hour order block here, price dips into the higher the wick, and then displaces higher. Uh, And then, yeah, I basically mentioned that I was very comfortable targeting higher prices due to the respect of bullish PD arrays, i.e., the 1 hour order block, which I highlighted above here, um, the 15-minute inversion fair value gap, which is what I actually based my initial entry off of this morning. And then I've also plugged in an invalidation point. So for me, if price breaks below this point here, where you've got the black line with the X in the middle. If price breaks below that low, then I will invalidate my position because there's no reason if it is bullish, there's no reason for price to break below and break and close below that low. But yeah, even if that happens, for example, the reduced stop um um I've reduced it to 0.5% now. So overall, that will result in a total loss today if I do lose this position of about 1.25%, which I feel like is a good amount of risk, is good controlled risk. Um, and then yeah, at some point in time, if we continue to get displacement, I'll just move it to break even, and I'll make it risk free. I also filled in my daily report card as well. I filled it in. I mentioned obviously ideas for both positions. Uh, I'll expand on it a little bit later on, after the GBP AUD position is finalized. But yeah, just a couple questions. Did you trade today? I did. Why did I take the trade? So this first bit is in regards to the GBP USD short attempt. So I said that price came into a premium PD array, 4 hour bearish order block during London session. Initial reaction gave the impression that there was an opportunity to target lower prices. My God, my English is so poor. Lower time frame breaking structure coupled with disrespect, sorry, of 5 minute fair value gap prompted the position. Good entry, but trade lacked momentum. So that was GBP USD, and then GBP AUD. The trend was clearly bullish, as I showed on obviously the daily, weekly, 4 hour. Reversal opportunity with price seeing support at 4 hour inversion fair value gap formed framework for idea. And then did I manage my impulsive behavior today? So I mentioned that I did. Um, uh, Reduce the risk taken off the back of yesterday's win. That was important to me. Sometimes there is a tendency to be a victim of euphoria. You've won. It's very easy to convince yourself in this space that you're the shit, that you've got it all figured out. And I've made that mistake far too often. And so it's important to me, especially because I won quite big. Reduce the risk. You don't need that much risk in order to pass your challenge in the first place anyway. And then that just makes it easier psychologically. If you do lose that position, I don't feel the need to get back in and go and rectify that loss. And then I mentioned, depending on GBP AUD willingness to move higher, I will move stops to break even to make this position risk free. I'll probably expand on this a little bit more as the obviously the GBP AUD position wraps up. And then in terms of a grade, I gave myself a B on this. I said temperament was good after initial GU loss. Did not feel rushed to get back in. Saw opportunity for GBP AUD in New York, was comfortable to get in at reduced risk. B also, the reason why I gave myself a B as well was because I didn't necessarily like how I moved after I took the GBP USD position. I got too comfortable, went back to sleep, and I don't like situations like that. I want to be present at all times, because presence, I think, for me, is kind of what allows you to accept the risk that you've taken. Um, I think in the past, not so much now, but in the past, maybe a couple years ago, I think what would frustrate me the most is when you kind of let your guard down in a position that you're already in, and you feel like it's going in your favor, for you to then now come back later on and find out that it's it's essentially lost, or it's back to break even, or it's lot, or it's hit stop loss, for example, like. And then that's when you start thinking about the money that you left on the table, for example. um and so I don't want to reignite those feelings again, even though I'm way past that. But, in trading, when it comes to, I guess, dealing with psychological issues and the mental capital that comes with this, it's always it might not be, one thing, but it might be like a series of things, like a domino effect that leads to like an overall um mishap, and now all of a sudden you're tilting, for example. So yeah, those are things that I kind of want to avoid. um but yeah, overall I didn't think it was mad. I'll also give myself I'll separate out the grade, so I'll give myself a grade for the GU position. I still feel like it was a B. Kind of followed not even kind of. I did follow my strategy. Price came into a premium reference point. We took out an external point of liquidity in last week's Tuesday's high. And then we got lower time frame displacement in the opposite direction, as well as disrespect of the bullish fair value gap. So I do feel like I followed my strategy. It just didn't go in my favor. Obviously, for things that I mentioned prior, like the idea of counter trading and knowing when to counter trade. Um, but yeah, overall a B. I'll give myself a separate grade for the GBP AUD position when it wraps up. But yeah, overall, I don't think it was a bad day. Very happy that I kind of came to this space to hold myself accountable. And naturally the goal is to keep it going. So if I take another position tomorrow, I'll do a pre-market analysis tonight to kind of break down what I'd be looking for tomorrow. But if I do take a trade tomorrow, then you'll see me again. We're going to continue holding ourselves accountable until we're 1% better every single day. That's the goal.